Hmm.
Welcome back to Squawk Box. Headline: producer prices for May dropping more than expected. The core rate was up 0.2% in line with estimates, and the data comes just a few hours before the latest Fed interest rate decision. For her take, let's bring in Judy Schultz, the senior fellow at the Independent Institute. In her latest Wall Street Journal op-ed, she says it's critical to look at the budgetary effects of a Fed that's raising interest rates. And you make the point, Judy, and welcome. You make the point that all this, everything the Fed has done and is considering today, is based on the notion that inflation and unemployment are inversely related, the Phillips curve notion. And you actually question whether that's the case. Well, if it really doesn't work, think about how horrific that is to try to raise unemployment and try to put people out of work when it might not even solve the problem. But you know who you sound like? You sound like Bernie and Senator Warren and AOC. How do you end up on the same with such strange bedfellows and both arrive at the same conclusion from different sides of the political spectrum?
Well, let me just say right off, I don't go along with, say, Senator Warren and think that it has to do with corporate greed or some of the other villains that she sets up. I think I'm more closely aligned with Jack Kemp and with the idea that people working productively is not inflationary, and real economic growth is not inflationary. So what I'm saying is that it's a mistake for the Federal Reserve to think that they can finesse this trade-off. This goes back to Keynesian thinking from the 1970s, that government managers were so brilliant that they could do a much better job than market forces, and that they could decide what the cost of capital is. And I'm always
Good morning. Good morning.
and I think markets have been happy to see higher employment and a robust economy. Resilience is great.
Apologies, Jaffe. I wasn't able to get on for the London. I mean, I was exhausted, man. Oh,
I just want them to stop. I think
it's like being pinned down and like you're trying to get up and you just can't.
economic activity that causes the negative repercussions from activists.
But it's the other side of, or not the other side, but it's a different part of the bureaucracy that controls all the supply side issues that you're talking about. The Fed can't deregulate the
Gold.
economy.
Gold was a beautiful bounce. So peep this.
But they can't
I completely missed the
prevent the government from
buy on
spending.
gold,
This is the
but
only
I had
way that
gold
they can
at
make
this
if they
4 hour
just
level
truly
of
supply side, they keep the interest rates at
1955
and
for a
increase the supply
buy,
of
and
money
dropped the
would be
ball on
cheap.
it.
And that would
So
be great,
if you
but
go
then
to
you've
the
got
4 hour
their
time frame,
mandate of
let me
price stability.
enlarge this so you can see
They
it
won't be
better.
able to try
So
to
if you go to a 4 hour
enforce that
time frame,
at
this was
all.
a
So
level
they
where
don't
it just
really
kept
have any
bouncing,
other tool, do
respecting,
they?
bouncing, respecting.
Well,
Literally
first off, I
1,
think they could be
2,
more
3,
helpful.
4.
They could
So
be. That
I
is,
do think that today for
it's
the
saying our biggest problem is
interest
overspending.
rates,
And what we need
gold
to
is
do
gonna
is
head
move
up
to a
higher.
balanced budget as soon as
Potentially to
possible.
take
The
out
Fed would be
the
helpful if they would point that
1987
out.
area.
They don't have to make it a political statement. It just has to do with the
Yeah,
future
I like gold
fiscal
for that.
viability
And
of the
also, I
country.
mean, we have
Because the Fed has to
multiple
take
4 hour
on the
candles
burden
closing
of
green. We just had a
financial
nice
deficit, and that causes the
4
monetary
hour green
panic.
candle.
But as far as
So
not
I
being able to
definitely like
influence the
gold for
supply
longs
side,
today.
I think that's not so. The Fed really controls the cost of capital. That's where
I
I
know,
think
right? Yeah, it'd be
that's not
tough, man.
everything, but that's what they do.
But
That is a
sometimes like it'll
monetary
catch up to me.
instrument.
I can
And
usually go
our
for
big problem now in the
a good amount of
economy
time
is
where I'll
it's
sleep
not
like
the
2,
lower
3, 4
employment.
hours
I think
tops.
employers work very hard to get those people to come back to work. They don't want to let them go. But we need those people to be more productive.
Yeah,
We
so
want
gold looks
maximum
good.
productivity, and that's where we're falling down. The way you get more productivity, you already have human power. You combine it with technology. And so you want the software and the plant equipment. You want to be able to expand output. And that means business capital investment. So why would the Fed be trying to increase the cost of capital, which hits the entrepreneurs the hardest?
I see all that. Do you think that they're done at this point? In your gut, if you had to say, you hope they're done. You think they're done, but that's only a temporary reprieve because they'll be doing something else. So either going too low, too high. Again, that's part of the problem, Michael.
Well, it's funny to say in your gut. You know, economics, for all the modeling and all the pseudoscience, and you can't read an article in economics without just being inundated with the formulaic explanation of everything. But it's really a social science, and there is something to what you feel in your gut, and that's what
And
makes it
overall,
interesting
let me see.
discussions of the federal
EST. So right now, New York. So right now it's 9 a.m. For me.
talk with people.
I'm 8 hours behind you.
So you get into more of a sense of
Okay.
of
So
blowing
let's
it,
go
going
over the
in,
game plan
and
today. I'm
let's see
probably gonna have to
metrics
type
and
this
say
out
financial stability
for when
versus
everybody
fighting
else jumps
inflation.
on.
The Fed needs to look at its money and say, is hiking interest rates trying to get
Um, I usually try to catch like a nap after the market close, like at 4 p.m.
Perfect ending, for that
If I don't have any Zooms scheduled,
you could tell we were getting
I'll
closer
try to
the
nap
end.
from like 4 to like maybe 7.
Thank you.
So that'll be my like 2 to 3 hours sleep right there. And then if London is slow, then I'll just look to I'll just sleep during London if things are slow. Which yesterday it kind of was. I mean, today it kind of was a little bit, and I was kind of anticipating that because of the Fed rates today. So not much action. We had a little consolidation. Good morning. Good morning.
Producer prices come in cool, up 1.1 year on year. That's the lowest since 2020. Our roadmap begins with stocks. The S&P eyeing its highest open in about 14 months. Investors banking on a Fed rate hiking pause later today.
Plus, AMD sets its sights on NVIDIA in the battle for AI dominance. But is the company's new chip too late to the game? That kind of grumpy chip. And a warning from United Health.
So yeah,
Today is
let me
weighing
see.
on all the,
Proper
many of the stocks in the
schedule.
overall health insurance sector ahead of the open. The company's
Yeah,
expects
yeah.
to spike about
So
in the second
yesterday I had Zoom, so which kind of ran late, and I wasn't able to get in my nap like I normally do. But usually it's from like 4. So like once the market closes at 4, I'm like, okay, from 4 to 6 or 4 to 7, I can get it in and then wake up, do my thing.
It's just a 1-2 punch. Yet the statement comes out,
And like I said, whenever London is slow, I'm like, all right, let me go take a nap.
and then the press conference.
So I do naps.
David, I don't know. I was the editor of the high school Springfield Chronicle. Nice. And a lot of high school representatives now at this point. He's taking questions from people who are like, Columbia journalism school people. But that's when the market really starts going down because they answer the same questions, which are mostly about when you stop being.
I'm liking. So for today, if we could get I know during the 9:30 open, we're probably going to see a lot of sideways action or a lot of back and forth accumulation. Now, once the Feds comes out and they say what they're going to do, we may get another pop before the drop, but honestly, I'm hoping that we just get a straight flush, or at least we get like a fake out push to drop. So initially, like whenever we have like these high impact data releases or news, you'll on a smaller time frame, like a 5-minute or 15-minute time frame, you'll see price. If price spikes up, that means it's going to go lower. If price drops, that means it's going to go higher. Prime example is yesterday, right? So yesterday for CPI, the market actually dropped first. Let me go down to a 5-minute and see if I can go to yesterday. Where we at? Okay, there we are. Okay, so yesterday, the once CPI came out, the price action actually dropped and then pushed up. So I tend to look for these little fake outs on a 5 minute or a 15-minute time frame. It'll probably be better on a 5 minute or even a 3, where price will drop. So the first movement ends up being the fake out. So just be looking out for that today, which is what I'm going to be seeing. So if price drops, then I'm like, okay, I'll give it a few minutes to see if it's going to continue. If it's going to continue, I'll get in. But if price spikes up, I'll start scaling in with a stop loss, and then just see if I can ride this thing all the way down to the gap fill. Another thing you could do is you could just sideline it, let the Fed minutes get out the way, and then see how you want to proceed. First time listener here, what do you mean? Yeah, so I do I be having one-on-one Zooms with people I'm either mentoring or people that I'm guiding as far as answering questions about firms. But more often it's one-on-one educations where I'm teaching my strategies, how I go about looking at the market, the different methods, and the different methods that I use. And mainly, I mean, I go over a lot of price action, market structure, and then I do have a couple of strategies that are time specific, um, which is great for scalping. So that's why. And some is because like they're having consistency issues. So usually when someone is having the consistency issues, it's because either they're not putting in a proper trading plan, they don't have a good risk to reward strategy or method. So based on what they're doing, I get on to go over different ways to look at it, to look at the market. And by being able to speak to them one-on-one, I'm able to dissect what they're doing wrong, what they're doing right, and then from there make edits to be able to increase their returns, but also just going learning different ways to look at the market, right? Granted, I always say no one strategy is 100% right, and for a lot of people, like they're just trying to get more information on the futures market and why the futures market, at least in my opinion, it's better to be trading versus equities, because equity stocks, like I've mentioned before, at the end of the day, you run a scan. I mean, there are hundreds and hundreds of companies here and overseas that you could be trading. So the ticker symbols changes every single day. The percentage. So you have to go through hours and hours of dissecting a company. So like once you see a chart that you like, you gotta then break it down. You gotta go through the different time frames, look what's going on. Then you gotta look at what the company is about, right? What sector they're in, EPS. Do they have any potential future catalysts? Like what's going on? Are they in a sector that's currently hot right now? So there's so many things that goes into finding an ideal stock to trade the following day that it becomes very, very time consuming. Now, if you want to save some time and you want to participate in the futures market, I mean, there's a multitude of things that can be traded, right? You can trade the ES, which is the S&P 500, aka SPY, SPY, aka SPX, right? It's the same instrument, just on a different, just think of the financial market as a big arena, and in this arena you have different games going on, right? So you have the equity game, you have the options game, you have the futures, commodities, you have the foreign currency, you have the crypto game. So you have you have bonds, treasury notes that you can also trade. Now treasury notes and bonds, you trade those on the futures and commodity side. So with whatever firm you're with, like specifically with TD Ameritrade, you'd have to be approved for tier 3 options in order to be able to participate in the futures and commodity world. but essentially there are so many things that you can trade. And there are a lot of commodities that are almost traded like 22 hours a day, which gives you more availability to trade, especially if you're either on a different time zone, if you have a 9 to 5. So versus, with the stock market, I mean, realistically, the most important time in the stock market is from 9:30 to, let's say, 10:30, 11 o'clock. So the first hour and a half, and then the last hour and a half. The in between is noise, right? So if you're working a 9 to 5 or you have other things going on, you tend to miss that. So yeah, but definitely why is this? And it's like, the crazy thing is like, a lot of people think that, the futures market, it's some crazy, rocket science type of sector of the market that you need to know to be able to trade, and that's incorrect. Like, there are a set companies in each one of the indices. So the Dow Jones consists of 30 companies. The NasDaq consists of 100 companies. The S&P 500 consists of 500 companies. And within these baskets, there are certain companies that have a bigger weight. Like, their positive or negative on the day will affect the indice, right? Like, the last few weeks, it's only been about 8 companies that's been holding up the Nasdaq, and biggest one was Nvidia. Nvidia's crazy ass earnings caused the Nasdaq to run over 300 points to the upside, right? So when you understand these things, then it's like, okay, well, if you want to trade Nvidia, I mean, Nvidia is like over 300, is like over $200 or $300 stock. So that could be very expensive, to where, like, if for you to even, let's say, $4,200 would probably only get you like 3 or 5 shares type of deal, right? Or maybe 6 or 10, somewhere around there. Whereas you can trade the NASDAQ, right? NQ. Now you have the NQ mini and you have the NQ micro. So with TD Ameritrade, it's a bit expensive, right? Which is why I tell people, look into Tradeovate and look into NinjaTrader, because during the market hours, NinjaTrader and Tradeovate, it's only about $500 to trade the mini, which is the actual futures contract. Then you have the smaller version of them, which is called the micro. And the micro on TD Ameritrade, it's a little over $1,000, but on Tradeovate and NinjaTrader, it's like $250 or under $200. So that means if you had $500 account, you could actually make, 20 to 50 or maybe even $100 a day on that $500 account trading the micros, right? No PDT. So now it is much quicker and easier for you to build your account up versus versus having to sit here and trade equities and debate and fight with yourself, like, damn, I'm up $50. Should I take the $50? If I take the $50, like, oh, like, I'm losing the day trade. But if I hold, tomorrow I might not be up $50, right? It's like you're always playing that what if. So when I was under PDT rule, like, I struggled with that. I was fortunate because what I was doing is I was watching stocks throughout the day. I would place trades, and I was somewhat swing trading, right? Because I would buy a stock just before a close, right? Depending on how the chart was looking. I was like, okay, I could buy this here. It looks like it's going to continue tomorrow. Boom, tomorrow comes in, pre-market, I'll exit out. I'm up, 50, 100, 200, $300. I keep it pushing. So you have to also understand the time in which you start participating in the market. What are the conditions of the market, right? For example, we're in a very choppy scalpers market. Like, there's so much volatility back and forth. 1 minute it's up, next minute it's down. 1 minute it's up, next minute it's down. So it is not ideal for swing traders. I mean, depending, and that also will depend on the sector when you're coming in. So you always want to assess the market to see what kind of conditions. And then we have so many geopolitical issues that are affecting the markets on the back end. It hasn't been fully reflected because we had the whole debt ceiling agreement, and now we have the market pricing in another pause, which is like that's not gonna happen. At least I don't think so, especially with the Feds raising printing more money. And on Monday, I'm looking at the NasDaq running, and I'm like, yo, why is the NasDaq in the market running? There wasn't any like real positive news. And then at midday, I find out, oh, the Feds just printed $200 billion. So that's $200 billion that's going to be injected into the market, which makes the market goes up. So understanding things like that will provide you with opportunities for you to capitalize in the market. Paying attention to what goes on overseas. Like, let's say right now, if one of like China's major development companies was to go belly up, yo, the market would drop easily 2.5–3%. So knowing that, yo, you come in today, you looking for shorts, you looking for puts. And $550 needed for micros. Oh, that's even better. Yeah, so for you to avoid that fee, this is what I would say. You can chart on Thinkorswim, right? Or even E-Trade. I don't know if E-Trade offers it for free or whatever, but you could set up an account with TD Ameritrade, put a couple dollars in there and whatever, and now you have live feed. And then you just use Trade08 and NinjaTrader to execute trades. That's one way to go. There's always a way. You just have to look for it. And Thinkorswim charting, in my opinion, is by far the best. The tools that you get, like even if you're doing options, like before you execute an option trade, you can actually see like if it moves in your favor, like how much profits you can make, how much you can lose and stuff like that. Like they have so much simulations and stuff like that. You can back test. You can, well, I think you have to have like over $3,000 to be able to get access to on demand. And on demand is basically a back testing system where you can go back any time in the past years, any day, any time, and have that day replay like it was actually happening right now. And which means you'll be able to execute trades, whether it be stocks, whether it be option, futures, commodities. So definitely something to look into. And I do believe Thinkorswim also has a paper trading function. When you have it on, like you see how mine shows green, it'll be yellow or orange. Yeah, trading TradeStation now, but yes, I love to. Awesome. Let's do use TradeStation. Morning. What's up, Mel? Yeah, buddy. Awesome. You've been missed, bro. You've been missed. I have people hitting me up, man, ready to send search and rescue for you, bro. They're like, yo, where's Mal? Like, what's up with Zimbo Trading? Like, I was like, yo, man, he's busy handling business, man. He's busy handling business. So they're like, you sure? Do we need to send search and rescue? I was like, nah, he's good. He's good. I know, bro. I know. Let's see. So today, the usual suspects, bro. Dow Jones, NasDaq, ES. I was explaining how we had the contract rollover, and the previous contracts expire in 2 days. So today's what, Wednesday? So it expires on Friday. So I'm hoping that today, with the Fed rates, we get a little fake out push to the upside, and then a drop to come fill this gap. Now, if it doesn't fully fill it today, maybe Friday, but I'm definitely looking for shorts. I'm not very eager to get in right now, so I'm gonna be watching for some kind of pop and exhaustion below, actually below 34,545, because as you can see yesterday, the Dow actually gapped down, right? So the Dow closed at 34,536 yesterday, and then it opened at 6 p.m. It opened at 34,436. So it was a little over an 80 point gap down that it did. It hasn't fully filled that gap yet. So, which is crazy. It's like now it has a gap to the downside, a gap to the top. So I'm hoping that it fills the gap to the top side first before coming down. I also have interactive broker, but haven't traded with them yet. Need about. Okay, I see it's like, yeah, that was. Yeah, it definitely is since the open, and then we have NQ, which is negative. NQ just went negative on the day, right? So NQ is definitely more prime. I want to see NQ close below 15,010. ES is still positive on the day, which I'm pretty sure it's going to end up catching up to the Dow and NasDaq. So yeah.
Yesterday. Can you believe that?
I can believe it. I mean, it's, these stocks of these REITs that are largely populated by office buildings that are half occupied have come down a lot.
Where are you on the idea that they're just going to tell you have to come back? Because right now, finally, there are a lot of, it's hard to get a job. So, like, why don't you, if you're Jamie, he could now go down the hall and say, hey, go try to get a job.
I think that's the key in terms of leverage, why you have some companies saying, all right, that's it. Labor Day, everybody, back, 4 days a week. Nobody comes up Friday, except us.
Right.
4 days a week. And first responders and garbage men. Yes.
And everybody else out there doing it.
Sometimes Dave was off on assignment on Friday.
No, I just don't wear a tie. I'm here.
Well, get Kramer's Mad Dash, countdown to the opening bell. Take a look at the futures here as we kick off the open and await the Fed. Don't go away.
All right, guys. 6 minutes till the
Welcome back.
open.
Let's get into NasDaq. Of course, we got an opening bell about 6.5 minutes away. Netflix, a name we often discuss, got some research this morning.
I've been liking Wolf Research a lot lately. This piece called Sharing is Caring, lifting price targets, subscriber net ads. Basically, look, there's 6 billion total net ads that can add because of this whole this password sharing was a monumental existential event for people who are sharing and they are subscribing, and it's really working. Don't forget the ads here.
Cracking down on password sharing so that multiple people in a family can no longer be on the same plan, or
It's working,
and therefore you get new subscriptions.
And by the way, David, in terms of stocks that have been up, this
Yeah, I
one
mean,
has
that's
been.
already
All
happened.
right, now name me a stock that is up 55%
Let's
or
go.
$92 since a particular event.
What's the event,
The
Jim?
Princess Bride event. Tesla.
Oh, I didn't know you were going to Tesla.
Yes, well, I did that because if I had said Tesla at the beginning, as Mad Dash, you would have said, "Oh my God, he's going
So
to
you're
big."
surprising
Yeah.
me a little bit.
Yeah, I just did that, just
Yeah.
totally out of reference to you, because I feel like the lady you feel
May
hurt by me.
16th interview with Elon Musk that we
Sucks.
had.
Yeah.
And which
Now it says
Jim
101
refers to as
times fiscal year
Princess
23
Bride,
numbers.
Because, of course, is quoting the Princess Bride. Yeah, that's quite a move.
That's since Princess Bride.
Yeah, it's over 50%. Yeah, there it is.
It's now look
There it is.
if you put in the Yacarino
Look at that.
when it went to Yacarinos, but what I'd say this: what was the Princess Bride about? It was I'm no longer involved in the day-to-day
Go.
Tesla.
Let's
I'm
go.
back to work.
Let's see.
So this is the Princess Bride move. You have to write Princess Bride.
Princess Bride move.
Yeah.
Can it continue, Jim? Is I think the
But
larger
who was the
question.
woman star in Princess Bride?
Robin Wright.
You know everything. You know everything.
All right, we got an opening bell about 5 minutes away. Stay with us right here on Sparkle Street.
Dow's already dropping. Ooh, let's go, Dow. Oh. ES is still the only positive indices out of the three. Oh, let's go, Dow. Yeah, B. Mm. Let's go. It's like, bro, what you want to do? I'm scaling into a small contract short on ES, but I'm doing it on the Forex side. Just because, I mean, it's still the only one positive. And since the NasDaq and Dow are already dropping, there we go. Less than a minute. stop loss, not quite yet. But bro,
We mentioned Tesla's win streak before the break. Take a look at Delta Air, though, going for 14 straight wins today. That would be a 13-month high. It already blew past the record set in 2008 of 10 on Friday, Jim. What's going on here?
Look, I think that this is that worldwide travel is more important than domestic. Airbus today raises its rate of growth.
The 20-year delivery forecast.
Travel is American Express stock has really been rolling. This is just people. It's called revenge travel in the industry. I was called the long money, short on time, but
there
it
we
is an
go.
amazing travel.
Dow's dropping more.
Congratulations, all these
Let's
airlines for
go.
hanging in. Very
There has been some
Let's
discussion
go.
that oil,
Let's
although
go.
oil's rebounded some,
Closing off
but it
half
does
on
benefit some of those air
ES
carriers with lower
short.
operating structure.
Stop loss to break
I was with
even.
a guy from Darley
Ooh,
Ingredients,
go
which is
down.
making
Go
the
down.
biodiesel.
Live, baby. All right, so my stop loss on ES short is now at break even.
So yes, it does matter.
ES is now negative on the day. Let's go. Locked in a quick 2 points. Up 3. Let's go. 3.5. Let me take another. Okay. Took another half off. Let's go. That's what I'm talking about.
So I think only Citi is looking for a 25 basis point hike today. Everybody else on stockpiles.
Let's go. She dropping.
Make that claim.
Don't target. 250. If we see weakness. Yeah, I took a short on ES, but I took it on the Forex side, which is US 500.
I know you don't. Yeah. You're not taken with the press conference. We know that as well.
No, because
And I'm about to scale in on NasDaq shorts as well. Yeah. Let's go.
Yeah, that's some perspective. Both the medical loss ratio increase.
Let's
at
go.
UNH and
Scaling into NasDaq shorts.
get more procedures done that
She
they
looking
didn't
good.
do
She
during the
looking
pandemic.
good.
And then the positives for all these companies that basically make new parts.
Well,
Right?
they really the numbers for there's been
You're all original parts still, aren't you? You're all original.
I still original I came right from the manufacturer.
Yeah.
But the MRSP for me is actually up.
A minute. Let's go. B. Let's go.
Yeah.
But David, let's go back a little bit to Fed meeting.
Okay. So,
Yeah, the PPI that's pretty good. Yeah,
Yeah.
CPI, but yeah,
Let's go.
why not hold? Because
Let's
the
go.
numbers up
Dow Jones still dropping.
the home builders and the Toll Brothers wait. Should we continue to hike because of the is that what we should do with the toll?
Oh, still going. Still going. Let's go.
you've been saying
Let's
for a
go.
long time it's about
We're up almost 5 points on ES.
and that has not broken. So just
Close another half. Stop loss in profits.
We're going to start seeing a break in wages when it comes to consulting.
Let's go. Let's go. Oh, am I gonna get stopped out? Nope, still alive, still alive.
Major cuts amongst every bank. Wells Fargo in a quiet way. Morgan Stanley,
Ooh,
Lloyd's
down.
Bank, JP Morgan, are they filling positions? We don't know. Goldman Sachs, we know from that.
Okay, it's all right. We locked in some profits on ES. Have a small runner left. I might get stopped out.
That's not the golden way.
Which made
You gonna stop me out? You're gonna stop me out.
to this table of their IPO barometer. It takes into account a bunch of different elements of the IPO market. Basically, it's
And still alive, still alive.
of IPOs, and they think the back half's going to bring some more activity.
I understand that they may not be.
they may not be, but maybe they're listening
Oops.
to you.
Okay.
That you have been espousing.
I'm still alive on ES shorts, bro. Let's go. No stop, no stop.
You refuse to believe it.
I still refuse to
It's like
believe
that final scene in Fast and Furious.
And I'm stopped out. So I got stopped out of my runner on ES, which is fine. La, 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 la. Yeah, the Dow's looking good for that. Let's see.
Missed it. I know Vin Diesel's in that, right?
Hell, you're Jason's favorite. He's in Jason. He's in.
Nice.
I love it. Not
Yes, for that movie Spanish.
And how about Disney pushing back a bunch of
Okay, all right. Nice, clean trade. Anybody took that with me?
You push things back.
What are you talking about?
Well, I mean, you push production back. Remember, the production up front costs money. They said they're going to have a dividend. This may be one way they have a dividend.
In general, they're trying to bring down the cost of production. I mean, Iger said that to me in the interview we did earlier this year. And that obviously is a part of it as well. Just John Favreau,
33,965.
sell their arms to other rivals, right?
Yep.
Monetizing some of this.
Yeah. Well, you got Stark Industries died out.
Stark Industries did.
Hey, David, what are you
That's
hearing?
true, Jen. And you talked about it and said it was not
Marvelous. Marvelous.
Now,
Ooh.
what do you hear?
NasDaq said, nope, I'm gone. NasDaq said, I'm out of here. Awesome, awesome. Well done, well done. Quick, nice, easy way to start the day. Oh, NasDaq is still sliding. Uh-oh, uh-oh. So is the Dow. So is the Dow. Yeah, we're not doing that. Ooh, yes. Yes, buddy. Yes.
Are they in the room with us right now?
Slide. Ooh. Scaling back into ES shorts. Let's go. Let's go. Print, baby. Print, print, print. Mm-hmm. Come on. Come on. Let's go. Let's go. Ooh, yeah.
These are enormous firms that we frankly don't talk about enough. Whether it be the big guys that trade, Blackstone, Apollo, KKR, Ares.
Trying to see what's
Whether it even be names like Brookfield that doesn't trade. Well, it does too. I shouldn't say that. Of course it does, but not the same
Well, I'm
way.
trying to broaden out our coverage. I mean, because what's happened is everybody's asking me, why did you not mention that Blackstone's moving up? It's doing really well.
Let's go.
$109 billion market cap company. Yeah. Now, we're not talking about
buddy.
metering anymore. They sort of
Yeah,
settled
buddy.
that whole thing down.
Come on.
What happened to the bank mini crisis? What happened to that? I mean, geez, they're doing well. And then, by the way, in terms of the worst group in the market, which are the dollars,
Let me see. Scalp ES, NQ nicely. Spy puts. Spy puts. I like it because again, so just a reminder. Overall, I'm looking for the market to come down and fill the gap. Oh shit. Okay, NasDaq. All right, so look at on ES right now. If you look on the left hand side, right, ES is the only one that's positive on the day. It should be following the NasDaq and the Dow. All right, which is why I took the short on that on ES over NasDaq and Dow, since it was the only one positive out of the two. Now, pulling up ES chart, right? Look at this 1 hour time frame. On this 1 hour time frame, we have a massive gap up on a contract rollover, okay? Now, you guys may be asking, what's a gap up? Well, a gap up is when price in one session closes at one level, and the next session it opens up either higher or lower. If it's a gap up, it's higher. If it's lower, it's a gap down, right? Now, when it comes to futures, these gaps do get filled, okay? Now, the contract that's still running, it has 2 more days to expiration. That's on Friday. Now, once it expires, price has to come down and fill this void. Now, it's ironic that everything is lining up with CPI and then the Fed interest rates. So I'm thinking that today we should get a nice drop and, start making our way to fill this gap. Now, what I'm going to be looking for is I'm going to be looking for a confirmation candle closing below 44.03. Okay. Now, if we can get a close below 44.03, that will give me confidence to add to my position to the downside. Now, mind you, I am currently short on the Forex side. Like, I have been scalping shorts, but I still respect my risk to reward parameters where I'm still risking about 5 to maybe 6 points on ES, looking to make about 10, 15, 20 points if possible. But once I'm up 3, 5 points, I'll lock in some profits. I'll move my stop loss to break even, and then I'll let the trade do what it's going to do.
Still the case. Still an expectation. We're going to have to extend the merger agreement. How they're going to go about doing that, what form of conveyance of additional money is going to take place to Activision shareholders is still unclear, but that's still very.
And what's crazy now is the Dow Jones actually has a gap to the upside. Hold on.
Yeah, it's weird. It's really weird.
The Dow Jones has a gap to the upside and a gap to the downside. So yesterday, the Dow Jones closed at 5 p.m. 34,533. It opened up 80 points below that, right? So you can see it didn't fully fill this gap. All right. So I'm thinking for the Feds, we'll get a pop up to fill this gap, and then the rates come out and we drop. The old contracts spread are horrible. Last week, I'm assuming that's to do with volume. Yeah, oh yeah, absolutely. That's why, like, from Sunday, I automatically switch to the new contracts, right? So you can see, look it, on the Dow Jones, the contracts are going to expire 10,000 in volume. Current contract 50,000. Let's look at, oh, what the hell? Let's look at ES. Okay. ES, 145,000 for the old contract, 338,000 for the new contracts. NasDaq. Volume for the old contract, 52,000. Volume for the new contract in play, 137,000. So I love that on Thinkorswim you get all of this. I'm not familiar with NinjaTrader or Tradeovate, so I can't really speak too much on them other than the fact that their commissions to trade is a lot cheaper than Thinkorswim. But Thinkorswim offers you so many bells and whistles. And again, I could even do options, right? I could do options which will have a time decay on NasDaq, ES, oil, gold. I just can't do it on the Dow, which I don't understand why. I've asked TD Ameritrade about that, but no real answer.
It's actually a very small deal, a private deal. It's the PGA and Lyft. Where is, when you take that sudden departure from the scene, where, the news is that Jay Monahan, of course, who runs the PGA, informed its policy board creating what they call a medical situation.
Okay.
And so
NasDaq is looking really, really good, man.
day to day is what's very important here. It takes what is a memorandum of understanding between these two parties, namely PIF, with controlled by the PIF, Saudi Arabia, and the PGA, and turning that memorandum of understanding into a definitive agreement under which the two parties would merge, and there would be a significant infusion of capital from the Saudis into this combination, which also would include other tours, as well, for example. A few things I'm hearing, of course. Well, first, let's just remember, it was only a little more than a week ago I sat down with Mr. Monahan and his counterpart, his unlikely counterpart, Nasser Al-Mine, who runs the PIF, And Mike was talking very boldly about getting this thing to a definitive agreement as quickly as possible. Take a listen.
I think it's a matter of weeks. We have agreements on the framework, which is an excellent first step, and it all depends on just finalizing many things, including the evaluation. Once we get that, I think it's just a matter of weeks.
We're gonna get that done.
Question now, sorry, is whether or not it really can possibly get done in a matter of weeks. The key situation, of course, not just including Mr. Monahan's illness, but is dealing with the players who want to share the economic upside from this news, who want promises that are just not on made verbally, but are on paper, and it can get to a certain level of complexity. I'm hearing the players, for example, may be hiring their own investment bank to advise them. I'm also told that Patrick Cantlay, one of the players, is also a player director who's sponsoring Goldman Sachs, is probably getting some good advice from the likes of Goldman Sachs here, and has been an important voice here in terms of what are we going to get as players here, stepping up and saying yes to all of this, given that we were willing to accept a lot less to stay at the PGA, so to speak, than go to live golf. And so that's going to be a key issue here. There's a lot of potential money on the table. And the question is, how are you going to guarantee economic benefit for these players? And are they going to align themselves? And it's going to be more complex negotiations. There's one guy who also probably stepped in here and helped in his absence. And that would be Randall Stevenson, you have to believe.
Nat gas could be a bit difficult at times. As long as you have a good risk management and a good strategy. Yeah, it's pretty good.
I will say that this is this is what people assume when I'm talking about paralysis. Verified. It is an issue that dovetails incredibly well with a lot of our viewers. And the fact that Goldman Sachs may have been hired, that's very good news to have that. Can you break this through?
I also have a statement from the PIF that I just got saying they are committed to working closely with the PGA leadership and board to advance their previously announced transaction to invest significantly in the growth of golf for the benefit of players, fans, and the expansion of the game around the world. Again, that is just sent to me from the PIF from the South. So there you go. That's what we got. We'll keep an eye on it as it is, as Jim just said, Carl. It's not a public deal, but it is certainly one that has a great deal of interest.
Definitely got the public's attention, no question, and attention in Congress as well.
Yeah.
Looking at the impact of the Saudi involvement in American sports.
Yeah.
And yesterday we talked about Man U, Qatar, right? What's happening in multiple levels.
I think that I remember when the CEO United Airlines came here, a decade ago. She said, "Look, there's going to be a wave of commerce between our area of the world, your area of the world, that is going to shock you." And I wasn't dismissive of it all. Yours been fly United Airlines. It's like they have a bar. United Airlines is a bar. It's kind of like it's like Casablanca back when you were in the bar. But they've become a great trading partner in that region. And I think that we have to continue to watch it because they want to do more deals. They got a lot of capital. It's very exciting. Really, very exciting. Hey, by the way, like I said,
Triple
the fact
Q.
that Logitech is down.
Yeah. Yep. Trap. Bullish trap. I hope so.
Which is rather shocking.
It's like, come on. It's like the market's been running for too many days. No significant pullback. It's like, watch today.
This man's been on the show many, many times.
Give me a second, guys. I'm over here adjusting the font size on my
It's very important.
MetaTrader magic keys.
Company, a lot of us use their devices. It's supposed to be in the company. It's the company. So we have to
City also downgrades on that news. They go to neutral. Take a look at the markets. S&P's managing a gain here at the open of about 6 points. The Dow is going to be outsized affected by UNH, which is is responsible for all of the losses there. As for
Perfect.
bonds, yields
I like this huge ass font size that was just like in the way.
bit cool, but you got the 2-year right around 4.63 and
Mm.
the 10-year just south of 3.8. Be right back.
Yeah. Okay, damn, okay, NasDaq. Well, mm, here comes the Dow. Here comes the Dow with the reversal. NasDaq is now positive on the day. We waiting. I'm about to get stopped out on my reshort of ES. Good question. I mean, well, I do like I do think that the Dow may come and fill this gap down at 34,536. So that's another 100 points from where it's currently at, 110. So I do like that. 15-minute. Go down to a 15-minute. So I'm actually gonna set a sell limit at that level. So once that gap is filled, yeah, damn. Probably could ride it out, to be honest. Let me try this.
Nice interview this morning with Ryan Sullivan and Shell as they move to keep their output steady, hike their dividend about 15%. Overall, oil's getting a small bit today, even amid some reports that the U.S. is quietly restarting talks with Iran on some potential prisoner releases, perhaps, maybe trying to curb their nuclear program. Take a look at the energy complex this morning. Dow trying to recover some early losses, down 92. Back in a minute.
Let's see. Okay. Yeah, it sure is. These rascals. market. Let's go. Let's go. Like, do your thing, chicken wing. Let me see, target. Let's do that. Okay, let's go. Yeah, buddy. So yeah, so I've set a limit order, a limit sell on the Dow at that gap fill. So if price spikes up really quick during the Fed minutes, I'll get that filled. But in the meantime, I'll continue playing it.
It's time for Jim to stop trading.
Who's on the stock? But Modelo Especial has passed Bud Light as the number one beer. Obviously, Bud Light's the number one.
So I'll just show you what my thinker, what my trading view chart is looking like. So I like this rejection that it just had right here at the purple line. We are also below a supply and demand zone, which is really good.
It is interesting that what is up
Pretty
today
much all morning, the Dow's just been since what since 4:45 a.m. It's just been creating lower highs, lower lows, lower highs, lower lows, which is really good for what I'm projecting today. So
help all shoppers and all shareholders. That's just been his mantra, and it's a shame that's
indeed. So we'll watch for the meeting at noon, and then what about tonight?
And then tonight we have Confluent, which has become the company that everybody loves, and Bolero, which is Tom Shannon's come back. The stock had a bad quarter. We'll see what happened.
I'm hungry.
Positive, obviously. St. News Night Health stock's down 58 points, but telling people who are members of that down 58 is actually a reasonable level. You can think about something like that.
Yeah, ES. So now ES and NasDaq are both positive on the day. Dow is still the weakest one. So much divergence, man. It's like, what the hell? And then you have GBP USD, GBP Euro USD all moving to the top side. There was a lot of economic data today released, so trading relatively light. All right, guys, give me a few minutes. I'm just gonna make me some protein shake. But I'm right here.
70 billion a week, aren't they? Something crazy like that.
Crazy. They have to refill.
Back to the top. Yep, squeeze time. Yeah, we already had already knew it was a possibility that it could come for those highs. Yeah, the sideline wait. Okay. Timing is squeeze here at 25 points. Nice. Good long if you took that now. Yeah, it's looking like it might squeeze a bit more.
Just given what he's delivered to.
Then that's, a sign that they're nearing the end. It's a lot. We talked to Vince Reinhardt yesterday. It's a higher bar to keep going once you pause. Body in motion. So everyone's expecting the hawkish message because that's a compromise.
Gold looks good too. I mean, I like gold for those 4-hour highs that it left.
But it doesn't feel with their communication that that's where they're going to go.
Let me see how to.
Because it's really hard for them to make predictions that are accurate, and it's hard to read into where Fed members think they're going to be in a year from now on policy because they're supposed to be data dependent, and nobody knew that inflation would go this high, and nobody knew how fast it would come down. And it is coming down really fast. I mean, PPI this time was 11%. We're at 1% now from year over year. So they have no idea, and they're saying they're data dependent, so it's hard to determine what the so-called reaction function when you're looking at the dots. I think it's super confusing, but today it could send a message. Let's continue the conversation. Let's bring in Harris Associates partner David Harrow, investor in lots of banks and companies abroad right now. David, how does the Fed decision and forecast today fit into where you think the market's going?
Well, given the way we invest as long-term value investors, this decision, which I think you've pretty well handicapped, it really doesn't have an influence. We look to buy businesses with good cash flow, good managements at low prices, and this type of news and activity only alters short-term price. It really doesn't impact the medium and long-term valuation of the business. So if it creates some disturbances, it might give us some short-term trims and ads, but generally speaking, I think everyone realizes that yes, the Fed was extremely late, and perhaps they've now overdone it, and as a result, they're going to start slowing down and pausing and what have you. But over this period of time, businesses have already adjusted to higher days of free money are over. This is why it's a little.
I see more upside until FOMC. Yeah, I'd agree. Especially because I'm still looking at the Dow. So, as I explained, I have a sell limit on the Dow Jones at this upper gap fill. So, which is 34,536. And for NasDaq, I mean, NasDaq could push another 100 points or so before dropping for FMOC. So right now, just sidelining, waiting, not eager to enter any other trades. So I'm just going to be waiting. Can you guys hear me? Yeah, okay. I'm actually trying right now. I'm going to try to figure out how to allow the commentary on my on the YouTube stream. So if any of you guys have any ideas how to set that up, let me know, please, and thank you.
International equities wildly underperform U.S. stocks over the last 10 years. And it's been because of two reasons. Reason number one is valuation pressure. S&P 500 trades at 18, 19 times earnings. European equities trade at 11, 12 times earnings. Reason number two has been the strength of the dollar. And this strong dollar, meaning the undervaluation of European currencies, now provides us an opportunity as an overseas investor to buy undervalued equities using an undervalued currency. And when the ECB catches up a little bit with the Fed in terms of rate increases, you should start to see an impact on these currencies. And what has been a headwind, we weaker European currencies should become a tailwind. Number two is the impact on banks in Europe cannot be understated because for the last 10 years, the banks have struggled with negative, not real interest rates, negative positive money at ECB. Now, finally, that's positive interest rates, and this too should really enable Europeans' financial system. So you're able to buy them at low prices, each rates at 60-65%. It's throwing off a ton of cash. Lloyd's Bank.
I was like, nope, not yet.
The last 6 years, they can't wait till it's market. These are really good values, good businesses, and good franchises, in an environment which is conducive to their earnings.
Let me see, auto play.
You know, David,
Available.
you guys have done a good job outperforming the relevant index when we look at it, Open Market International versus the MSCI. But I gotta say I'm surprised. I mean, you're at 57%, the index only 21% over. I got it here, it's a 13-year period. It hasn't been a great place to be, has it, overall? I mean, you're doing much better, but it's still not a great neighborhood.
That's a very, very good point, David, because what is happening, look at that flow pyramid, really explained by those two factors. We've had the strong dollar in the face of international investors. You've had this valuation expression. Part of it, I would assert, is the real low interest rates between 2010 and 2022 really was conducive to growth in Texas, which is not really demanded by the European equity outside the U.S. equity markets. It is
It's
really
not available on
felt,
Made for
again,
Kids.
those companies which are very, very small,
Features.
allow these businesses to sell at high valuations, which has caused a huge valuation dispersion. And I believe, and this is been a long cycle, and I think this cycle has come to an end. And at some point, similar to what we saw, by the way, from 2000 to 2007, remember old economy versus new economy versus huge Russia.
This does not help.
I think we're setting ourselves up for this again. And in international equities, especially value, you do get that double positive, being able to buy undervalued securities at low prices. And yes, the rear view mirror looks terrible, but I'd rather be investing today with that kind of a rear view mirror than looking in a rear view mirror that is loaded up with euphoria. I don't want to be buying at the top. I want to be buying at the bottom. That is the essence of value investing. Buy low.
All right, David, we'll leave it there with the mantra. David Harrow, appreciate it, from Harris.
Thank you.
AMD's a big story today, unveiling its new AI chip, and our Christina Partsinevelos was at yesterday's event. Multiple firms raising their price target on the name this morning. Christina joins us more on the fallout. Morning, KP.
Hi. Well, if I were to base it on the reaction of the crowd yesterday at AMD's event, the star of the show was their new graphics chip, MI300X.
New highs on NasDaq.
Especially when the company promised they would go from $30 billion a year in AI applications to over $150 billion just in the next 4 years or so. Investors were looking for two major things yesterday: AI customer announcements, who signed on, who was committed to buying these new AI chips, and then secondly, financial guidance. Neither were discussed, which contributed to the sell-off that we saw in the back half of yesterday. The rebound today, though, is coming from positive reaction from the street, and then this Reuters report that AWS is considering using AMD's cloud chip.
All right, let me see if I can get this done.
They took to the stage to speak about another CPU product that would be
Probably might do this after,
so the
but
relationship between both companies is already established. Mizuho, Wedbush today both raising their price target by $50 to 140 and 145, saying AMD is the next AI play, which we know. TD Cowen likes how diverse the portfolio has become, with a price target of 115. Piper Sandler liked the new open source software business, so that was new yesterday. NVIDIA actually spent the last 10 years developing their own version, so this is a big step for AMD to move forward with this product. One exception, though, was Bernstein's Stacy Rasgon, who said the timeline feels a little delayed relative to NVIDIA. AMD's new GPU only samples with customers in Q3. The actual product launch could come months after that, so his price target actually remains $80. In my interview with CEO Lisa Su yesterday, I asked about this slower timeline, and she told me that new GPU chips will be in production by the end of the year, but she wouldn't tell me the name of the customers. We should hear about that in coming months, guys. All right, stock's up again, Christina. It's an exciting time for your beat. Thank you, Christina Partsinevelos. we head to break, our roadmap for the rest of the hour. It's not just Tesla, Roku coming off its 12th straight day of gains, now up around 80% year to date. How much higher can that one go from here?
Plus the pulse of health insurers, United Health, Humana, Centene, Cigna, all down.
And the cautious consumer, what new CNBC data is revealing about spending as we watch the Dow try to work its way out of the red, still down 115. Don't go anywhere.
Guess I have to play with that after. Mm-mm-mm. Jeez, NasDaq is relentless.
Sarah mentioned Roku before the break. 12 consecutive days of gains. That is the longest win streak for this name on record. Shares, however, moving slightly lower this morning. Next guest says international expansion is fueling part of that run and predicts a rebound in ad spend will benefit the street. Joining us here at Post 9 this morning, Oppenheimer's Jason Helfstein has a buy on the stock, 75 target. It's great to see you back. Just explain, what do you think the catalyst was here? Is it about the ad tier craze or something else?
Yeah, so I think this stock is one of the favorite shorts, and so we're definitely seeing more short covering, positioning more offensive into potentially a Fed, easing, or flattening and then easing cycle. And so I would say the move in the stock isn't particularly fundamental; it's more technical. But we think the setup is very good from a fundamental standpoint.
So how long do you stick with it? What you talking about?
Oh, no, you're just at the beginning. So Roku was basically an early cyclical. So they were one of the first to get hit when advertising slowed down. So therefore, they should be one of the first to benefit when advertising rebounds. In addition, we've seen very stable active account growth. Active accounts up 17% in the first quarter. Streaming hours up 20%. So, to the extent that there's been a concern of a COVID hangover, we're really not seeing it in this company. And, the ad market is going to get better, just a matter of time.
I'm trying to remember how early they were in sort of adopting operating leverage discipline, right? Cost discipline. I know Anthony would come on all the time and talk about how they were agnostic about original content, but then that theme kind of got muddied a bit. Where are they on that?
So they cut back, and then when they actually saw kind of like COVID pull forward, they leaned in, but then they leaned in too hard, and then they cut back again. So we've changed our kind of timing for EBITDA profitability multiple times. At this point, we're thinking break even next year. Meaningful profitability profitability in 2025. If you look at the stock on kind of gross profit,
Guess I will figure that out later.
trading at a bit under 5 times gross profit next year. Meanwhile, Netflix is 13 times. You know, another ad tech company, Magnite, is 6 times, right? So, you know, we think that this is still this is stock that used to be $4.50 and is now $75. Or $75. So we think it's super early. You know, they have a third of households for connected TV, we think, kind of globally. And really, there's just no competitive threat. There's really a cyclical play at this point and execution. And they have a new executive that we're very bullish on.
But isn't a cyclical play challenging in this moment? And the ad market hasn't rebounded.
It hasn't, but it's not getting worse.
Wow, NasDaq is still ripping. Goodness gracious.
You're going to see advertising recover potentially in the fourth quarter, but most likely in the first half of next year.
You know, you cite a multiple for Netflix, for example, but it actually generates free cash flow.
True.
I mean, when are these guys going to do that, and how are you discounting that back to get to what you feel, I guess, is a good multiple to be buying it?
Sure. So we're looking for basically break even next year. I mean, the multiple, we're putting a multiple on 2026, so kind of 20 times that year's cash flow. So you do have to go out. This is a model that has tremendous leverage. I mean, they could go from break even to 200 million literally of cash flow in a year. So, you know, hard to know the timing, could be off by, you know, 6 months, etc. But the bottom line is, you know, the threat of Google smart TVs, the threat of Amazon smart TVs, it's just not happening. It's really between them and basically Samsung, and then kind of every other operating system just doesn't have scale in the game right now.
So Apple doesn't, TV,
No,
Fire Stick,
TV is-
Amazon, not
Yeah,
enough.
I mean, Amazon losing share with the operating system. You have Vizio, but they're small, subscale. So it's really, again, think of it like them, Samsung, and everyone else. And, you know, again, the main issue with this company, they did not accept third-party programmatic demand. So the ability, like, digitally, instantly to book ads. And so when the ad market slowed, people said, I have to cut my Roku budget because I'm not going to be given the ability to manage it on a short basis. They hired a new president of advertising for Fox. We think he gets the whole third-party mantra. It's just they haven't adopted yet. But that's our bet, that they will catch up to the rest of the industry from a technology standpoint by the end of the year.
As for Netflix, we've seen a bunch of target increases on this idea that they can add a bunch of new subs at 100% incremental margin. Is it overdone, or where are you going?
Advertising is high margin, 100%.
Damn, Dow.
We've done survey work, and the kind of paying accounts we surveyed said, hey, I will pay for the extra people in my family who don't live with me. Even the kind of people who probably get kicked off, a third of those said they would pay on their own. You saw the antenna data last week. I mean, Netflix looked at this for what, 4 or 5 years.
Just why they were so stubborn about it.
Ooh.
You know, listen, in subscription businesses, churn is the evil, right? You want to do everything to avoid churn. And they were taking it very slow. To be honest, they didn't do it until they hit a kind of like a brick wall, right? They hit peak subs on without it. And to open up the address.
Let me see if I get some tunes, how well this is gonna come out. Okay, got some good views. All right, I gotta figure out how to allow the comments. Oh damn, that's loud. If y'all hear me talking to myself, it's because I'm here testing out the volume and the audio. Not too shabby. Not too shabby. Let's see. Hmm. 30 minutes till I jump off, guys. So if you guys have any questions, feel free to ask. I will be jumping off at 11. What's up? What's up? Let's go. Chat, I have a question about futures. I know there's a fee when buying a future contract. Is there also a fee? No. So the fee, so right when you purchase, it's commissions. So when you buy futures or when you're trading futures or commodities, the fee is the commissions. It's no different than when you're buying and selling stocks, right? The broker charges a commission. And the commission will be contingent upon how many contracts you're buying or selling. All right. So just anytime you're using a broker, no matter what, forex brokerages, U.S. brokerages, equity brokerages, futures brokerages, commodity brokerages, there's always a commission that they charge. And what you need to know is that you, as long as you have the margin requirement to trade whatever set asset class, you'll be able to trade it, right? So I'll show real quick here on Thinkorswim. Give it a few seconds. All right, so here on Thinkorswim, right, YM is the mini. Okay, that's 8,800 for one contract. Okay, now you can trade the micro, which is /MYM. Okay, now that will cost you $880 for one contract, and that means every 1 point movement is 50 cents. Okay, so what you do to calculate is like, okay, 50 cents times 100 points, okay, that's $50. So you, if you have $1,000 account or even a $1,500 account, you could trade the mini Dow Jones, catch 100 points, 200 points a day. If you can average out 100 to 200 points a day, that's anywhere between $50 and $100 a day trading the micro, which only costs you $880 per contract. Now, if you were to shift over to like Trade-O-Vate or Ninja Trader, it's significantly lesser to trade the micro. So this might only cost you $100 or $200 or $250 to trade the micro. Okay, so every indice has a micro. So you have a micro ES, a micro NasDaq, a micro Dow Jones, a micro oil. So oil, let's see if I could show you. Okay, right here, here's the mini ES, right? So oil is /CL. That will cost you 10,846 for one contract. And oil pays $10 for every 1 cent movement. So that means every 10-cent movement on oil on one contract is $100. If you catch a full point on oil on one contract, that is $1,000. Okay. Now the mini oil is /QM. Okay, /QM is the mini oil. but look at how expensive that is. Right? Look at how expensive. It's $5,423 for the mini oil. NG is natural gas. For you to trade natural gas, it's 7,480. And again, to trade these instruments are a lot cheaper on Tradeovate and NinjaTrader, but essentially NinjaTrader bought Tradeovate, so they're just one and the same now. LE, NQ, HG. Let me see what HE is doing. So HE is lean hog, which is pork. So you can trade pork, you can trade coffee, you can trade orange juice, sugar, rice, wheat, a bunch of different things you can trade. So let's take a look at LE. So LE, which is live cattle, lean hog, which is pork. These are commodities that are US based. So they will follow the US holidays and stuff like that. So if there's a US holiday and the stock market is closed, LE and HE are not going to be traded because they're US commodities. Today, nice open and drop. And right here, you see the dotted line. We had a contract rollover, pushed up. We had a gap. And since then, now it's dropping. That's live cattle. Then we have HE, which is lean hog, pork. Nice gap up, yeah. That's a massive gap up. Shit. Probably probably limit up. And just like in stocks, how you have a limit before the stock moves, before it gets halted, is the same thing in the futures and commodities. Everything that is traded has a limit up and a limit down. It's just sometimes you might not see it. Like I didn't see the limit up and down on the market until the pandemic. 5% up, 5% down, which that's a lot. So let's go back to the market. Dow's weak. NQ just not cooperating. You're welcome. Happy to help. So, if you are looking to get into futures, I would highly recommend using one of these funded firms to trade. Okay, you could do Apex, you could do Top Step, you could do Take Profit Trader. Personally, I am using Apex, but I prefer Forex brokerages over the US based brokerages because these brokerages, Top Step, Apex, they have a trailing Take Profit Trader, Take Profit, and Apex, they have a trailing stop loss, right, which is from whatever the highest value of the account is. Whereas with Forex brokerages, it's a set percentage that you can risk per day. Usually, most of them, it's about 5%. So you can risk you cannot allow a drawdown of 5%. So you can allow a 2 or 3% drawdown, and the next day it resets to the 5% again. As long as you don't reach the overall 10%, you're good. I currently using Thinkorswim for futures. Okay, so you're most likely, so you're trading your own capital. Again, if you have a solid system and if you've been making good returns, I would again highly recommend using one of these prop firms. Just again because it's like, you're using someone else's money to make money, and your capital is then safe to do other things with. So just something to look into. Yeah. Take Profit Trader has they have I'm not. I mean, I haven't used them. I know Kush uses them, so I thought they have a take. Was it a trailing stop loss? But if they don't, that's awesome. Sounded like I might need to hop on there. That's crazy. Like cause we ended up having a meeting with the owners of Take Profit Trader. Pretty cool guys. Mm.
Communication courses.
These are very, very difficult things to deal with. All right. One thing that's not that difficult right now is saying, hey, the market's higher. Let's get over to Bob Pisani and find out exactly what he's thinking about.
It's been a great day, a great PPI report. Inflation's dissipating, but you see the market reaction is fairly muted. Not up much. We're new highs here. The problem is it's in the market now. Lower inflation expectations are in the market. So where do you go from here? Just want to show you the sectors. The important thing is the sectors that have been underrepresented as far as the market movers this month are kind of better today. Utilities, real estate, staples, all underperformed this month, doing a little bit better. A bunch of industrials are at new highs. I'm among the few that are at new highs. I think that's very interesting right now. I just want to point out how unusual this is with the S&P up and the Dow down so much. And as Bertha mentioned, this is because of what's going on with United Health. And so the important thing is if you just take a look at what's going on in the Dow movers, Nike, we only have 4 stocks that are down in the Dow, but United Health is the biggest stock in the Dow Jones Industrial Average. And remember, it's price weighted. It was almost $500 stock. So when you're down 35 points or so, that's 240 points on the Dow. So this is the problem with price weighted indexes. You get these stocks move suddenly, and the index sort of is underrepresented for what's going on in the overall market. We've been talking about momentum, talking about this big momentum in Tesla and Nvidia and Apple, but there's a lot of stocks, some big names that have almost Tesla-like characteristics in the last few weeks. So Netflix has been amazing. IBM was 128 a few weeks ago.
You're welcome.
American
Happy to
Express has
answer
been up
any questions you guys
almost every
have.
day. Walmart's been moving rather aggressively. And it's just quite amazing. The little Caterpillar was $208 a few weeks ago. And folks, all this started because the jobs report on June 2nd, the whole landscape started to change after the jobs report. That reinforced the possibility of a soft landing. So we've been seeing things move up recently. The industrials, there are a whole bunch of big global names that are hitting new highs. In fact, one of the only groups, there's only about 30 new highs on the S&P today. It's rather surprising. But these are the big global names: Packard, Parker Hannifin, Ingersoll Rand, Rockwell, Eaton. They get 40 to 50% of their overall revenues overseas. So there's a little bit of a global expansion that's going on. I mentioned yesterday the ETFs for global stock markets are hitting 52-week highs as well, not just the United States. And the Nikkei is at a 30-year high, a 33-year high. So the issue here, guys, is what's going on, Sarah, and where we can go next. The S&P right now is trading for almost 19 times forward multiple, including the first half of 2024. That is not a recessionary multiple. That is an expansionary multiple. And the market so far has been right about that. We'll see ultimately what happens in the second half. So far, the stock market is right about little or no recession. Back to you.
Bob, thank you very much. Well, one determining factor could be the Fed this afternoon. Investors are anxiously awaiting the decision, the news conference. Our next guest says the Fed has not done enough to throttle demand
Yeah,
growth.
yes,
And
bruh. This market is just relentless.
and that they are going to have to raise real interest rates to succeed. Sorry about that. Joining us now is former Richmond Fed President Jeff Lacker. Jeff, it's good to see you. It's been a while. So you would be in favor of hiking today?
Yeah, I think there's
Hell yeah, I'm in favor of hiking. Hike this shit, man. Hit it with a
If you
50.
look at the historical relationships
Let's knock this
the
market
federal
back
funds
to
rate,
reality.
current inflation on a 4-quarter basis, and the average unemployment rate, the relationship suggests that where we are now, they're going to need rates over 7. Now, whether they need to go that high or not remains to be seen. If inflation was at 3.5%, as they forecasted in March for the end of this year, and the unemployment rate was 4.5%, 5 would be fine and likely to do the job. But inflation has proved more persistent over the last 6 months.
The headline numbers, the 12-month numbers look great. They're all coming down. I see it there, the PPI and the CPI on the screen. But if you look underneath at the month-to-month core numbers, those have been steady at around 5% at an annual rate in the last 6 months. And we've got substantial momentum baked into wage gains. And those don't seem to be abating right now as well. So I think that, coupled with the strength in the labor market and spending, suggests they haven't done enough to raise the real interest rate and give people an incentive to delay spending. So they haven't really done enough to restrain spending growth in dollar terms. And that's what it's going to take to reduce inflation. Given that, why pause now? Why not get ahead with it?
So what you say about the real rate is really interesting because it doesn't get a lot of attention and play. Can you just explain why that's important and whether you think the Fed is looking at that? Because with these inflationary numbers, the real rate is actually pretty low, right?
They are looking at it. I know.
Personally, I love market structure. I like market structure, so I like analyzing on a higher time frame, finding supply and demand zones, and then marking those areas off and then watching for when price comes to those areas for either a short or a long. I can show you some examples here on maybe the Nas. Let me see the Dow. Do I have some on the Dow? Okay, beautiful. Let's maximize this. Voila. So you can see right here, so this shaded area right here, this was a supply and demand zone, and you can see how price had gapped up right into it and it just continued holding. I was short biased on this because of this gap, but it wasn't quite ready for it. So this right here, supply and demand zone, let me go to a 4-hour time frame and just show you how it respects it, right? Right here, this gray shaded area, that's another supply and demand zone, beautifully respected here. Let's see where else. I want to say I have more on my trading view setups than I do on Thinkorswim. Let's see if I have some on ES. Yep, I do. So same thing, ES, right? Again, supply and demand zone. We held above it, pushed up, and then again right here you can see we gapped up over a supply and demand zone. And I do want to say I also have it on NasDaq, maybe not on here, but I do have it like on my trading view. So there are different platforms that I chart on. I chart on Thinkorswim, TradingView, MetaTrader 4, and MetaTrader 5. So supply and demand zones is one, market structure, break and retest. What else? So I hope that answers the question. I mean, because as far as like setups, like if I'm looking for what, like a pattern, one of my favorite patterns is a H pattern. I'd have to like really scan through that to find one. I might have some pictures I could send you guys or post. Give me a second. And I've mentioned before, I have some time specific strategies that honestly you can implement that strategy on any one of the indices, commodities, even foreign currency pairs as well. But that I'm leaving that for the futures boot camp. So just know that there are many styles and strategies to trading. No one strategy is 100% right, right? And if any of you guys are looking to do this full time, you want to make sure that you're participating in a area of the market that is always going to provide you opportunities to make money, to make a paycheck, however you want to look at it, right? Small caps, like I used to love small caps, but small caps, there was a good portion of the year where they wouldn't really be moving, right? And it's like, well, making $10, $20 a day, or even $50 a day, it's not that beneficial, especially when you factor in like the cost of living and stuff like that. So being able to participate in an area of the market where you have literally round the clock opportunities to make money, you can grow your account so much within a short period of time. I think just put in my business email. So don't be scared of the futures market. Way more beneficial, especially because it's like a lot of times like bad news or good news will happen overnight, over the weekend. And it's like if some crazy ass news just came out, and we're expecting the market to do a massive gap down the next day, right? You can take advantage of that, coming in and logging into your account and trading ES, or trading NasDaq, or trading Dow Jones, whether it be YM, ES, or NQ, or whether it be the micros. And there's so many different platforms that you can trade it on. You can trade it on regular US based brokerages. You can trade them on forex brokerages. So, and again, for me, I personally prefer forex brokerages just because the margin requirements are much lesser, and you can swing trade, right? So like with NinjaTrader and Apex, you can't particularly swing trade, just because once 5 o'clock rolls around, the margin requirement is like quadruple. So it goes from like 500 in margin when within the trading hours, to like 2,000 or 4,000 in margin for that 1 hour. Which if you don't have the capital for it, they'll liquidate you. So I don't particularly like that. And again, it doesn't give you that much control. And especially when it's when you're buying contracts, right? Me, I like to scale in and scale out. So what that means is sometimes I anticipate the market or that particular instrument to go against me a little bit, where I can add at specific levels to lower my cost average or to raise my cost average. And once it comes back down to my original entry or up, I'm already in a good amount of profits. So with the forex brokerages, every position that I add is individual. So I can pick and choose which position to close. Where if I was to take, let's say if I was to take a short on, matter of fact, let's say I take a long on Dow Jones right now, right, at 34,385, right? And let's say it comes down to 34,339, and I add, right? And let's say we get a nice pop to like 34,400. And let's say I wanna close out the last contract that I added, right? Because that's the one I'm up the biggest on and whatever. So if I wanted to close that, I wouldn't be able to. Soon as I hit sell one contract, it's gonna close the first one and whatever. So it's I just like areas that it gives me a way more control. And I'm able to, and I have options. I love having options to be able to do this, that, and the third. Like I've done hedging on on Thinkorswim, but then I received an email from the SEC. So what I was doing in hedging, so because we can trade any number of these contracts, right? So we have YMM23, we have YM U23, and then we have YMZ23, right? So what I would do is I would long one, right? Or if I was short one and it was kind of going against me and whatever, I would come in here, okay, oh, what's the next contract? Boom. And then I would pull up that contract and I would long it or short it, make some money on the upside or downside, close it, and then I would add to my losing position, right? So that's how hedging works. So I did this enough times to where I received an email from the SEC, like I can't be doing that. So this is where again I love forex brokerages, because on forex brokerages I can hedge. So like if I see, like let's say I'm swinging a position, but then like there's a squeeze is happening, I can literally double or triple my position size in the opposite direction, make the money back, like make some profits, and usually it'll get to the point where overall I'm in profits to where I could close out everything and then re-add my short or my long once I get like additional confirmation. Like these are some of the things that you're able to do with forex brokerages that you're not able to do with US based brokerages. So just know that. And regardless of what I'm telling you guys, I mean, I highly recommend to do your own due diligence, right? Look into this. Like I know forex brokerages or just forex in general has a very bad stigma because of all these dipshits out here doing scams and savory things or unethical things. But even in the US, I mean, even in the US, I mean, you don't hear nobody talk about Bernie Madoff and and the the Ponzi scheme that he ran on people. And it's like this dude was actually like on the board of directors for the exchange, right? And this dude was ripping off everyone. So does that stop people from being able to put money with a broker, right? Does it stop them from trading the stock market? No. So the B book, nah. I mean, if you can find like a good A book, go. B books like just do your homework. I would say just do your homework on it before you really stop putting like large capital in. Like I mean, I've had some firms over, like every firm that I've used overseas, I've never had any issues taking money out. But then again, I have done my due diligence and I do start off with them with like a small account just to see like, okay, how the spreads are, what hours do they, what hours are you able to trade, the margin requirements, and then the withdrawal aspect, right? Because there was one crypto firm based in Panama that I opened up an account with. This one, like they were like trading the account or whatever, and essentially I was getting about like 1% a day, which was pretty nice. So within like a year, I want to say like a year or so, I received like only 100% return. Like when I did my calculations, I thought I was going to receive like a 200% return on my capital. And I'm like, oh snap, like I'm about to drop like 50K with them. But then I'm like, first let me see how everything goes. And there's things that I guess I didn't see in the fine print or didn't realize. But my initial deposit, I didn't get it back. And every time I withdrew, they would charge me 20% of what I was withdrawing. So when it was all said and done, I really only made 100% return on, less than 100% on return on my money. But I mean, that's still better than having, money sitting in the bank and stuff like that. So I say this to say that there are many different avenues out there to make money, to have, decent returns versus, having money sitting in the bank collecting dust. Now, whether you're open to that, that's on you. But again, regardless of what anyone tells you, and I say this, whatever I tell you, feel free to do your own due diligence. Go look it up. Go look up these firms. Do some research. Watch some reviews. Like, dig deep before you actually start, putting your hard-earned money with a firm or even with these funded firms that I'm mentioning, right? Like, don't take my word for it. Go seek them out. Go ask questions. Go look up at reviews. Test stuff out yourself before anything. But one thing like I firmly stand on is that I always put my money where my mouth is. So I never recommend people to do stuff that I'm not personally doing myself. And sometimes things work out, sometimes things don't work out. And one example was this firm in Panama. I believe they were called Cash FX, and it was basically crypto and whatever. But yeah, bro, like, what do you think about Take Profit Trader? All right, so I've read their rules. Personally, I don't have an account with them yet, but I can tell you that me, Kush, and Mel, we did have a meeting. We did meet with the owners of Take Profit Trader. Two very good guys, well experienced and stuff like that. Obviously older than us. But I like their model, and and what they're offering. Like, it's crazy to me that like you can get a payout the same day, which is freaking awesome. Like, there is no firm out there doing same day payouts. So like, if you make 3K today, you could cash out half of that, all of it. You know what I mean? So I like them for that aspect. I'm currently not with them, only because again I still have like other accounts that I'm trading and working on and stuff like that. But I'll probably say by the end of this month, I'll get an account with them just to see exactly how they operate and stuff like that. But yeah, but from Kush, I mean, Kush likes them. I believe Mel has an account with them as well, and whatever, and these are all people that are putting their money where their mouth is. So they're not going to recommend something that they're not personally doing themselves, which is awesome. And one of the owners is like, he's an actual trader, like he actually trades the ES. So that's pretty nice to see, you know what I mean? So I hope that answers your question. Yeah, most firms it's either once a month or bi-weekly. And it's just like, I don't necessarily want to sit here and trade like a whole month before I can actually get a payout and whatever. Which some firms, or like some forex firms, like the first, like, it's first 30 days you have to trade, but then after that they go to like a they go to a bi-weekly payout. Let's see. Well, what kind of contract? Um, you're welcome. Like I said, happy to answer questions. You know what I mean? Oh, ooh, damn! Look at that. It is now 11 o'clock. All right, guys, I'm about to call it, and I'll be back for 2 p.m. So I'm gonna be back for 2 p.m. Just right now, it's like I'm not gonna take any trades until the Fed minutes comes out. Right now, I'm seeing that NasDaq is definitely doing a nice little pullback, which is about damn time. I still have my sell limit on the Dow Jones, so I'm mainly gonna be focusing on the Dow and NasDaq for the FMOC minutes. But just really tap in, and again, I know today's Wednesday, so I did say I'm gonna try again today to do London session. at 3 a.m. Eastern. So if anyone's interested, 3 a.m. Eastern, feel free to jump in. If not, I'll see you guys in the morning. So with that being said, peace out. Thank you for joining.